Hi pals, today I want to tell you about an analysis strategy, which seems to be complicated only at first sight because it consists of 3 indicators, but in fact it is quite simple, and its signals can be used even by beginners. This strategy, if you look at the back test, shows very good results, good profitability rate, and that's why I want to tell you about her today. So, the strategy consists of 3 indicators, MACD, Parabolic, and Moving Average, with a 200-day period. Let's first take a detailed look at each of these indicators separately, what signals they give, and then we will move on to the trades directly on the strategy. So, the main indicator for us in this strategy is the MACD indicator. It is one of the most popular technical analysis indicators, and it consists of 2 moving averages, of a signal moving average, which is fast, it is with a shorter period, reacts faster to price changes. From the orange line, which is called the MACD line, it is slow and it is slower to react to price changes. And the MACD indicator signal is the crossover between the moving averages when the fast line crosses the slow line from top to bottom. It is a signal for a down trade. Conversely, when the fast moving average crosses the slow moving average from bottom to top, it is a signal for an up trade. A separate indicator is quite rarely used because it gives signals often, but many of them can be inaccurate, so it needs filtering of signals, checking through other indicators, including such a variant as I will tell you today. Also, in the indicator, where there is a histogram, there are green and red bars. They literally duplicate the same information that we see on moving averages. For example, when we have moving average crossovers, when the fast moving average crosses the slow moving average from top to bottom, the bars turn red. They indicate that the signal is about to go down. The signal will be red. Moreover, the magnitude of these columns indicates how far apart the moving averages are. The higher the distances, the stronger the current signal, the current trend. And when they become pale in color, for example, pale red or pale green, this indicates that the moving averages have started to converge with each other again. And this indicates a loss of momentum, a loss of the current signal. In general, MACD for us will be the main indicator that gives a signal. You can focus both on the crossover between moving averages and on the bars of the histogram. Here it is more convenient for whoever, because the information here is literally the same. For example, the second example is when a fast moving average crosses a slow moving average from bottom to top and the bars turn green. And you can target either slides or columns. We need to set the MACD indicator for the strategy with standard settings. Then the next indicator is the parabolic indicator. This is a trend indicator that is plotted directly on the chart. To add it, you need to enter parabolic in the search bar for technical indicators. And we use it also with standard settings, those that are available by default. The signal to enter trades here, basic, looks pretty clear. When the chart is under the parabolic, it means that we have a down signal now. When the chart is above the parabolic dots, it is an up signal. And, in fact, the signal to enter the trade for us is a change in the position of parabolic points. For example, we go further. Consider the following example. Here the chart is above the parabolic dots, but as soon as the location of the dots changes, now they are on top, the signal changes, and now we have a local trend down. And vice versa, when parabolic points are again placed at the bottom, we have a local trend upwards, and trades should be made upwards as well. This will be our first filtering of MACD signals. And the third indicator that is used in the strategy is moving averages. Moving averages, exponentially moving averages, averages with a period of 200. To add it to the chart, you need to enter EMA in the indicator search menu and select exponential moving average. Next, after we've added, the default here is going to be period 9. We need to set it to 200. After we set the period to 200, our chart will look like this. Why do we need a moving average? In this strategy, it is needed to determine the long-term trend. That is, to cut off trades that will be against the current trend at the moment. According to the general rule of thumb for using moving averages, when the chart is above the 200-day moving average, we have a medium-term, long-term uptrend. So if the chart is above the moving average, we only consider upward signals. When the chart is below the 200 moving average, we only consider downward signals. It's such a filtering signal. So, back to the main schedule, and we're looking at how we're going to make trades on the strategy. First of all, we look at the MACD indicators. We are looking for crossover points. That is, when we have a crossover of moving from top to bottom, it is a signal for a down trade. When there's a crossover of moving from bottom to top, it is a signal for an up trade. Next, we make sure that Parabolic is giving us exactly the same signal. That is, if MACD has a signal to trade down, then the points of the Parabolic indicator should also be above the chart, confirming the signal. And the third signal filtering is the chart should be under the 200 moving average. If we're talking about a trade down, let's check how down trades work, using this medium-term trend as an example. Here we have a signal for a trade down. The Parabolic indicator confirms the trade. He's above the charts. But we can't use this trade yet because the price chart is still above the 200-day moving average. So we're looking for the next signal. Here we have a crossover from bottom to top, but we also missed this signal because the chart is now under the 200-day moving average. When the chart is under the moving average, it means that we only consider downward signals and skip the upward signal. And now we have the first signal down. There's a crossing from top to bottom of the slides. The histogram bars have become red. We check the trade on Parabolic. Parabolic confirms the trade. To us, the chart is under the points, and in addition, the chart is under the moving average. We use this signal and make a profit. Next, we have another signal, another top to bottom crossover. The histogram columns show the same thing. They are red. Parabolic confirms the trade to us because the chart is under the dots, and moreover, the chart is below the 200-day moving average, which means we can use this as a down signal. Let's now look at this same strategy, but for an uptrend for bullish and up trades. So now in this case, we need the faster slider to cross the slower one from bottom to top, or the histogram bars to turn green. So we have such a signal. We have a crossover from bottom to top. The columns are zeleny. Parabolic confirms this signal to us. The chart is above the dots, and we can enter the trade up. Moreover, the chart is above the 200 moving average, and this is another confirmation of the signal. Here, we have another crossover. Again, the fast-moving slider has crossed the slow one from bottom to top, and the histogram bars show us the same thing. Now they are green. Parabolic confirms the trade. The chart is above Parabolic and all above the 200 moving average. So we only make trades up, we skip trades down. Here is such a simple strategy that consists of 3 indicators. But in fact, it can be used even by beginners because the parameter of only one indicator changes, only the moving average, and the signals are not double digit. They are pretty easy to interpret and use for trades. So try it, traders, share your results, and see you soon.